With the rates hitting 8% and concerns over home insurance and affordability in Florida, how is the housing market doing? September numbers are out, so let's look at the third quarter and compare where we are today with a year ago and what we can expect going into 2024. Hi there, Kim Devlin here with Kim Devlin Team. Welcome to our channel, Your Key to St. Augustine. I'm sporting my teal today because the Jags are playing, but I wanted to get a market update to you all, so I'm filming on a Sunday because I know how concerned many home buyers and sellers are with the state of the housing market. There is a lot of uncertainty, so I am here to bring you the latest update of what experts are seeing nationally and what we are seeing locally here in Florida. Let's first take a look at what is happening nationally. When we compare last month, September, to a year ago, we have slightly fewer homes on the market. However, experts are expecting inventory to continue to increase due to the higher mortgage rates. You may be wondering why that is. Well, check out this chart by Altos Research. The increase in inventory is not a huge influx of new sellers putting their homes on the market, rather a lower number of homes going under contract due to buying activity slowing. With rates in the 7s and 8s, less homes are going pending, leaving them to sit on the market longer and allowing inventory to build as new listings enter the market. Many homes that are sitting may have been overpriced for a while, so we are also seeing price reductions and stale inventory. Many buyers assume there are bargains in their future, but right now there is no sign of that happening. Buyers assume that when demand falls, supply climbs, but nationally we are not seeing a surge in new listings, and this is why there is stability in home prices. Many buyers are waiting, hoping rates will come down next year. The downside is when rates fall, it will spur demand, but it won't spur supply. So waiting may mean less selection for buyers. If the interest rates stay in the 7s and 8s, buyers' activity will continue to stay low, which will allow inventory to build back up, but that can take some time. The good news is sellers are more realistic with pricing than they were last year. They understand the market has changed from 2021 and 2022. If the rates continue to rise, we may see prices come down some, but right now prices are holding up due to supply and demand. Looking into 2024, all experts predict positive home appreciation. Zillow is the highest at 4.9%, but we're likely relying on rates coming down into the 6s, maybe even 5s. Price reductions are starting to happen nationally, but less than 40% of the properties have reduced their prices. If the number gets above 40%, then we will start to see prices come down. Now, let's look at the Florida's real estate market in the third quarter. We did see interest rates rise, but at a slower pace than last year. This, along with limited supply, has contributed to stable home prices as well. For the most part in 2023, like last year, we have been performing below the level we were at in 2019. But the level of closed sales in 2023 has been gradually converging with last year's level, and in September, closed sales of single-family homes rose for the first time this year by over 6% year over year. Townhouses and condos were nearly on par with 2022 levels, but saw a slight decline of less than 1%. When looking at pending sales for single-family homes, we are pretty much flat year over year, which is a signal of seasonal trends more than anything else. When looking at inventory, new single-family home listings in September increased by 8% year over year, and townhouse and condo listings soared by nearly 24%. Currently, we are at 3.5 months of inventory and still below pre-pandemic levels. Price-wise, the median sale price for single-family homes in September was about $410,000, which was a 1.3% increase from a year ago. So in a nutshell, we are seeing some encouraging trends overall in Florida as we compare to both last year and pre-pandemic times. But now, let's see how Northeast Florida, St. Johns County, and Flagler counties compare. Looking at September in St. Johns, we saw a big jump in closed sales, a 19.8% increase from a year ago. New pending sales were also up 19.9%, and new listings were up 22%. So we had some really good. However, we did see a decline in the median sale price of 3.2% to $532,000 compared to a year ago, but it is still above the state's median price of $410,000. Despite this, the average price has increased in Northeast Florida, driven by the luxury market, which tells us higher-end buyers are coming into the area. In Flagler County, closed sales were up 41%. That is huge. New listings were up 12%, and pending sales increased slightly at 2.5%. The median price has come down as well by 5.1% to $349,900. Inventory in both counties are below pre-pandemic levels, but there's a slight increase in inventory for single-family homes compared to last year. St. Johns County is just under 4 months, and Flagler County is just over 4 months, which I would say is moving towards a more balanced market. So the big question, when will rates come down or when will prices come down? Well, we can't really predict this. Many experts thought rates would fall by the end of the year because they thought inflation would fall, but no one predicted inflation would be around this long. When we look at the history, you can see in 1980, inflation fell significantly, but rates declined at a much slower rate. And this may inform us of what we should expect, that rates may stay higher for a while longer to ensure inflation is gone. Now, there are a few scenarios where we may see rates come down, and that is a war, which we certainly do not want to see, a recession, and of course, a political push for the election year. So will we see a dip in 2024? It's possible. But again, no one can predict this. So what if 7.5% is a normal rate? What if in a year, 7.5% seems low? Last year, the rates hit 5% in the spring, and many home buyers held off. Then they hit 6% and later 7%. How many of you wish you bought at 6.5% this past summer? The bottom line is rates will probably be higher longer than we expect. Many home buyers do not feel that we have affordable housing in Northeast Florida, but 59% of our sales are at an average price of $454,000. And looking at this map, there are affordable houses in the area. They may not be at the beach, but they do exist. So you may need to reconsider where you can buy an affordable house in good condition and be open to other areas. If you are looking to buy a home, you are still in a good place to negotiate on price, repairs, and concessions. Another option is new construction. I would say that new construction is going to be a major contributor to inventory in the coming year. Even though they have likely learned their lesson from 2008, they're definitely not going to overbuild. But in September, 30% of the closed sales in St. Johns County were new construction homes. Many of the builders are offering some great incentives. So if you are looking to buy a home and get the best deal possible, call me for all the new construction incentives, including buy downs and money towards closing costs. If you are selling a home, the stats show that pricing a home properly will sell. Even with rates going up, the market is continuing to move forward here in Northeast Florida, with over 76% of the homes selling within 30 to 60 days. Whether your home is sitting or not, I would recommend offering a rate buy down as an incentive. This will help buyers more than a price reduction will. For example, my local lender ran numbers for one of my buyers on a townhome in St. Augustine priced at $329,000. My buyer was going to make an offer of $315,000, so I recommended to instead request a rate buy down. This rate buy down would cost the seller $15,000 and would save the buyer $165 a month, and would be equivalent to a purchase price of $305,000. So as you can see, this type of incentive would help a buyer lower their monthly payments. So if you want to learn more about offering this type of incentive, just give me a call to further discuss. As of now, the market in Florida is healthy, and in Northeast Florida, we are more likely to see the market seize up than have a huge drop in prices. We have been saying this for the past 2 years, but if you are waiting on a crash, the data just doesn't support it. So I would recommend that you stop listening to the noise in the mainstream media and do your research. Of course, as always, the market is local. So if you do have questions about a specific area or community, I can help you dive deeper into what the housing market looks like. So just reach out, call, text, or email. I'm happy to help. I value your opinion, so please share your comments of what you're seeing locally. Are you seeing homes sell quickly in your neighborhood? Where are they located? I would really love to know. I hope that this video has provided you with some good information. I certainly always try to come from a place of value. So thanks as always for tuning in, and I will catch you on the next one.